have gone up by 19%. The absolute EBITDA has gone up by 69%, as a result of which the company's margins have come in at near 21%. And that's driving a 136% increase in the company's profitability. Rajesh Bhatia, the Group President for Finance, Accounts, CFO of the company, now joins in. Good morning, and thanks so much for joining in. You've indicated that the sales volumes have been at 18.8% in the quarter gone by. Where is this growth in volumes coming in from, and can you do even better in the coming quarter?
So the additional volumes which we have, they're about 23% in this quarter on a year-on-year basis, both for packaging as well as packaging films. Packaging is quite notable because a 23% sales volume growth is only reflects that how strong is the demand for the flexible packaging is, and the packaging films growth was largely around you remember that in June of 2019 we closed our Dubai facility to relocate it to Russia. Happy to inform that the Russia facility came on stream and we announced the commercial production this quarter. So there are additional volumes coming from that facility, and the Poland facility also got not commissioned, but trial runs are on. But yes, that is giving us additional output. So these two are the major factors. Apart from that, even otherwise in all other plants also, like Mexico, where we had some under capacity utilization, they also did very well. Again, it was all a period H1 particularly because we had such a strong demand across the world for the packaging and the packaging products. Your question as to going forward, yes, we sure that these volumes are now going to grow each quarter, and we will be always coming out with the highest ever, on a quarter-to-quarter basis, the highest ever numbers in terms of our volumes as our facilities in Egypt, in Hungary and Nigeria now get commissioned, and these existing facilities of Poland and Russia also ramp up their capacity utilization. So I'm pretty confident that FY22 will be a year where we'll have strong volume growth, and FY23 also probably that will be around the time when our new investments will be at their peak of the capacity utilization. So next 2 years, in terms of the volume growth, we clearly see a path which we quite sure of.
Take that point, Mr. Bhatia. Just hang in there for a moment, because what I'm going to say is something that will make you happy and make everyone else happy as well. The fact that Moody's has revised India's GDP forecast for the current year CY20 from -9.6% to -8.9%. So mild uptick of 70 basis points in this year itself. But importantly, for next year, they have increased their outlook from a growth of +8.1% to +8.6%. Of course, so far, most of the macro parameters that we've been tracking have indicated that growth recovery could be much faster than what the street was anticipating. And turns out the first mild upgrade, if you must, or revision upwards for the CY20 GDP has come in from Moody's. Let's see whether others go ahead and increase their estimates or not. Back to you, Mr. Bhatia. Then, the margins did rather well this time in the second quarter. A near 69% jump is what we saw in your EBITDA. At peak, the BOPET and BOPP spreads were close to around 75 odd rupees. We just got commentary coming in from another of the industry players, 15 minutes odd ago. They said that BOPET spreads are now at 35. So what's the prognosis for margins, and where do the spreads lie at right now?
Yeah, so I think Q2 the BOPET spreads and Q3 BOPET spreads are always a bit subdued because of the demand for the festive season having already been met. We see that often, but I've said on this show earlier also that at least for the next 4 to 6 quarters we don't see any. All the downward trends that happen, they're only very momentary, and when the normalized the season commences, they're always back. And so we don't see that, if there is a temporary dip. According to us, there is no dip in BOPP margins currently for October when I say. In fact, their BOPP margins are better than the Q2 margins. And BOPET, yes, there has been some reduction. But, I think on a quarter basis, full quarter basis, we'll be able to still have a robust number. And obviously, the Q4 is always the best period from a packaging industry perspective. So we don't see much of an issue in terms of, these prices, which are very, very momentary.
Okay, and just one final question, Mr. Bhatia. What is the total capex that you have outlined in the medium term? If you could break it up year by year.
Yeah, so I think whatever capex we've announced overseas, that is now getting completed in FY21. Poland and Russia are already completed, and Hungary and Nigeria will get completed probably in Q3 and Q4 respectively. So we are on track to complete those projects. Other than those, I think we've not lined up any major capex in India or overseas as of now. Still evaluating, and as we always do, keep on evaluating, sort of the capex proposals. But one thing is certain that, aseptic business, liquid packaging, we are sold out for the coming season, which starts from January and February. So we'll be fully sold out on our existing capacity. So there definitely, we are going to get into a capacity expansion mode, and we're going to line that up so that, it will take about a year and a half for us to actually, commission the new capacity. So, but, we are all geared up to make that happen, because that's only a small capex. Because you need to set up only one printing line, and rest of
on that one, Mr. Bhatia, just a quick follow-up. How many are you looking to sell this year in terms of the septic packaging pieces?
So we look at that current year we will have about 70% capacity utilization. And, that was, as I said earlier, that was the only business which got affected because of the COVID-19. But, coming season, we are again, depending on the customer requirements, as I said, we are fully booked. So we'll do about monthly about 300 to 325 million packs a month, which is our current capacity. So, definitely going to add up another line, printing line.
All right. Thanks a lot for joining in, Mr. Bhatia. Wish you good luck for the remainder of this year. We take a short break, get you more on the markets on the other side. Stay tuned.